It takes money to make money in real estate, right? The truth is, it does require money, sometimes a lot of money, to buy real estate investments, but it doesn't always have to be your money. Using something called private money or loans from other individual investors, you can buy real estate. And in fact, that's what I've done for the last 18 years as a real estate investor. It's how I got started, and it's how I've grown my business. And in this video, I want to explain what private money is, where you can find it, and how you can use it as well. And we're getting started right now. So what is private money? If you think about a typical real estate transaction, there's a bank or a lending institution who provides the funds or the loan to make the transaction happen. But it doesn't have to be that way. If you just substitute the bank or the lending institution for an individual investor, or maybe a small group of individual investors, now you've got private money. It's as simple as that. The rest of the transaction is exactly the same. So even though the concept of private money is simple, you might ask yourself the question, why? Why would anyone want to borrow private money when there's banks available to loan the money? And why would anyone want to make a loan as a private investor? So those are good questions, and I'm going to start off by giving you some pros and cons from both perspectives, the benefits and the negatives from someone borrowing private money and someone lending private money. One of the first benefits for me was easy qualification. I was 23 and I was self-employed, which from a bank's perspective is basically unemployed. I had to go out and make money by flipping houses. And so for anyone who's a contractor, self-employed, doesn't have regular employment, and you got one in the side gig economy, you don't look as good on the qualifications for a loan. It's much more difficult to get a loan. Or if you have credit that's not as good as it could be, or if you don't have the full down payment, there's a long list of things you have to do to qualify for a loan. So if you don't fit in that box, private money could be a great source. But even if you do fit in that box, you probably know that applying for a loan is about as fun as getting a root canal. And if you want to not have to do that every time you get a loan, which has been a big part of my strategy now, going to the bank and giving my net worth statement and having a big, huge pile of paperwork every time I want to get a loan is not fun. It's not something I prefer to do. So I choose to have an easier qualification process by getting private money from an individual. But even when you get approved for a private loan, the speed that you can close with a private lender is another big benefit. I've had closings that happened as soon as 7 days from the time I talked to the private lender to when we actually had a closing. But very typical is 14 to 21 days, which is the exact opposite of a bank loan where you have to get appraisals and approvals and another approval, and then you have delays at the last minute. In a really competitive market like we're seeing in 2021, or really any market, being able to move quickly and confidently that you can close is a big deal. Another benefit of private money that I love is the flexibility. When you walk into a bank, they're gonna give you a sheet of paper that said, here are the terms, here's the interest rate, here's the amortization. This is exactly how it's gonna be, and if you don't like it, take it or leave it. Well, it's the exact opposite with a private lender. With a private lender, it's a negotiation. Now, often the interest rate could be higher than with a bank when you negotiate with a private lender, so that could be typical, that could be a drawback of private lending. But every other negotiation point is a back and forth. It's a discussion. If 4.5% interest rate is good enough for a private lender, and if that's good enough for you, then you agree on it. If all the other terms that you talk about or work for you, it's not a take it or leave it thing, it's a discussion, which is a big deal because often real estate investments have to be creative. You look at the numbers, you look at the property, you look at the situation, and you try to mold the terms of the money to fit the deal and not the other way around. A bank loan is what it is. Take it or leave it, you gotta make it work. The last and perhaps biggest benefit of borrowing private money is that you establish a long-term, mutually beneficial relationship with your private lender. When you think about the typical transaction with a bank, you're just a number. You're your social security number, you're a stack of paper. You either meet the numbers or you don't. With a private lender, I have an understanding of their life and how this money is affecting their life, and vice versa. I've had recent conversations with my private lenders about how thankful they are that this interest is allowing them to pay their bills, to pay their groceries, to fund their retirement. This is real life, and we're both helping one another. When you help one another, that's the good kind of business that keeps on going. They refer friends to you, they refer family to you, they have other money that comes available, they want to do more deals with you, and it goes through the ups and downs of the market. This was a big deal in 2008-9 when banks pulled back and they were not loaning as much money. I had private lenders who said, you know what, I don't want to go through the ups and downs of the stock market right now. I would love to keep some money that's stable in a safe position against the property. We'll talk about more about how to find people who kind of fit that mold of people who might want to do that. But the truth was I was able to have access to money in 2008, 9, 10, 11 when the best deals were available because of this long-term relationship. It wasn't just a transaction, it was repeat business where we keep working together. So this isn't a YouTube video where I only tell you the good stuff and that everything about private money is unicorns and rainbows and beautiful. There's always a downside. And one of the biggest downsides of being a borrower of private money is that it's not easy to find that person. You've got to do a little bit of work. It's not like going into a bank and saying, hey, Mr. Banker, Mrs. Banker, will you make me a loan? You've actually got to go out and find them. So stick around a little bit later in the video. I'm going to give you some ideas on how to do that. The other downside is there's a learning curve, that you have to learn how to do this, how to do the paperwork, how to negotiate the terms, how to understand what's a good deal, what's a bad deal. And I hope this video is helpful for you in that. I also have a course on creative financing where I go into a lot of the paperwork, the details, the terms, the negotiation. If you want much more depth about that, check out the description of this YouTube video for a link to that creative financing for real estate investors course. So far, we've just been talking about this from the perspective of the borrower of private money. So let's flip it around and talk about the private lenders themselves. Who are they? Where can you find private lenders? And if you do talk to them, why should they loan money to you? What's the benefit of making a private loan? Well, one of the big takeaways from me over the years of working with private lenders is realizing that the best candidates for a private loan is someone who already invests in real estate. Think about it. Some of the big obstacles to selling somebody on the idea of making a loan to you is, do they like real estate? Do they like the security of it? Do they want to receive income from real estate, or are they into other types of investments? Well, you don't want to have an uphill climb here. You want to work with people who already are sold on real estate, but perhaps they don't want to do all the hassle of what you're doing, of finding the deal, of fixing it up, of managing a rental property, or if you're flipping houses, of flipping houses. There's a lot of people out there who are interested in the concept of real estate investing, either don't have the time, the inclination, or maybe just the skill set to go out and do it themselves. So that makes a great partnership. And very often, I'll give you a story of how this worked for me. Often these investors are people who've already done it before. Now they're wanting to be more passive. So I met a person who was a professor at Clemson University. I went back after I graduated as a 23-year-old. I was taking classes in business just for the fun of it, to try to learn a little bit more. And this professor in my class was a real estate investor. He started talking and using examples of real estate. So after class, I talked to him, I asked questions, and started establishing a relationship. And that's the common theme here, is that relationship first, and eventually you have the opportunity to talk about private money. But it's a long-term game. That's one of the challenges, remember. It's a little bit different than walking into a bank and asking for money. You gotta establish a relationship first. And so I did that with this professor, and over a year's period, I showed him my business plan. I talked about what I was trying to do, talked about the types of deals that I was looking for. I didn't have any money myself, but eventually I got up the courage to ask, if I found a deal like this, would you be willing to put up the money? And the answer was, maybe, yeah, let's take a look at it. And so we went into more detail to start talking about how to structure a deal. And I'm gonna give you some examples later in this video on some ways you might be able to structure it with a private lender. But the main point for now is I talked to a person who's already a real estate investor. In this case, it was a class. But you could go to real estate meetups. I've been a member of my local real estate investor association for my entire career. There are other real estate meetups, there's Bigger Pockets forums. Basically anywhere where existing real estate investors go is a place that you can meet people, you can ask questions, you can learn from other people, and you can decide, do I trust these people or not? Is this somebody I could work with or not? And eventually you'll see the opportunities that come up to ask people if they'd be willing to be a private lender. That's the typical process for me. And again, it's not an overnight thing. It's not like walking into a bank and applying for a loan. You're building a relationship with people, you're establishing that you could be helpful to one another, and then eventually you ask for the money. I want to make an acknowledgement. It's easy for me here on camera to say, just go ask for the money, go meet the people with money. Here I was in a university environment where there's a lot of assumptions. I got a scholarship to go play football at college, so just getting me there in the first place was a big deal. My family had a pretty good financial background. I knew people who had money, and so I want to acknowledge that it's not always the same starting point for everybody. And that if you come from a background and a family that doesn't have a lot of money, you don't know anybody that has money, it's going to be a little bit of a challenge. It's going to be more of a stretch to go out and expand your circle. But the message I want to give to you is that don't underestimate the value that you will provide to other people that you're going to meet. Even if you're new, even if you don't have experience doing that or don't know other people who've invested in real estate, if you can go out and find good deals, and if you are a trustworthy person who can pay payments on time to your private lenders, you have an enormous value. There's a lot more money out there in the world than there are trustworthy people with good real estate investing deals. And if you have those two things, I don't care what your background is, you have a lot of value to add. But you do have to make the step, and this is the challenge again of private money. You've got to go out and meet those people. You've got to expand that circle. You've got to expand your networking, and that's not something that's going to come overnight. That's pretty much what you pay your dues with to get private money, but you can do it. And when you do talk to people, I want to talk a little bit more, what are the benefits to these private lenders when you're having a conversation with them? I found one of the best ways to get inside the head and understand where your potential private money lenders are coming from is to think about it in their shoes. This is someone who's saved up some money, they've invested their money, and they have a lot of alternatives out there. But not everybody wants to put all of their money in the stock market or in more traditional investments. Many people want the security of sticks and bricks, of a real investment that they can go look at, they can get an appraisal for, and really they're either a real estate person or they're not, like I talked about earlier. So you're trying to find people who like the security and the concept of real estate. They probably also like the income of real estate. Think about the context of the world we live in with low interest rates, where you go put your money in a CD or a bond, and even the most secure bonds get 1 or 2%. That's a very low rate of return of income if you're trying to live off of it, if you're trying to invest to pay for your retirement. So if you can offer somebody 4%, 6%, 7, 8%, which is very possible, and with a lot of the real estate investments out there, if you can do that, you are offering them a much better solution in terms of return. And then of course they want to make sure the money's secure. So understanding how to secure that money, this is part of the details of you studying your craft. How do you secure their money with a mortgage, with a deed of trust, have a local attorney who can help you do that paperwork and record that. A big part of the course that I have on creative financing is about that paperwork and understanding the terms so that you can have an intelligent conversation with an attorney and with your private lender. But given all that, a safe investment with a reasonable return, with a trustworthy person like you are, could be a great investment for that private lender. Now that you know a little bit more about what private money is and who potential private money lenders could be, I want to go behind the camera and give you a couple of examples using real numbers to show you what a private money deal might look like. I want to give you an example of a private money loan or a mortgage that's in first position on an investment property. Now keep in mind that every single real estate deal that I've ever done has been a little bit different. Each property is unique, each lender is unique, but I wanted to give you real numbers to show you how this could work in real life. So let's say you find a property and you have to do a lot of hunting, but you find a property that's worth $250,000 after it's fixed up. Maybe it needs a lot of repairs. That's also known as the after repair value, or the ARV. And let's say that you could buy it for all in $200,000. $150,000 of that is the price, and then $50,000 are the repairs and other closing and holding costs. So just for round numbers, you have a $200,000 investment that's worth $250,000. Now, how could you buy it? Let's say you don't have $200,000 to buy it. So what if you could go out and find a private lender who would loan you $150,000 at 7% interest, which comes out to an interest-only payment of $875 per month, or a total of $10,500 per year. And let's say they were willing to leave their money in the deal with you for 5 years. So just to give you the mechanics of this again, they have a mortgage. They're just like the bank would be. You have an attorney, you do a closing, or a title company, however you do closings in your area, and they are going to have a debt, so a promissory note that you owe them $150,000. They're also going to have some kind of security instrument, which in a lot of cases is a mortgage. Other states might be a deed of trust or a security deed in Georgia, where I grew up. And so the point is, though, they have a mortgage just like a bank would have. Now you still have $50,000 you have to come up with. In this example, I'm going to assume that you could come up with $50,000. If you didn't have that, maybe you have to negotiate borrowing more money from the private lender. Maybe you've got to get a partner. There's lots of creative situations. When I first started, I didn't always have the $50,000, so you might have to get a little bit better deal to make sure you can borrow it. I used $150,000 because that's a very low loan to value, which is often the most important thing that a lender is looking at. They're looking at the fact that if you fix this property up, they now have a $250,000 property that they have $150,000 invested in. That, for real estate people, that is a very safe position to be, because if you always say, if I got run over by a bus to my private lender, I hope they come to the funeral, hope they cry a little bit, but they now have an investment that they are in very good shape. They could go foreclose on this property and take it back and be in good shape. And so that loan to value is a big deal. So typically 65 to 70% is kind of what I try to stay within for most of my private lenders. And that definitely meets the case here. So what's your strategy in this case? Maybe you could fix it up. You could rent it for $1,900 per month. You found out that was the market rent for that property. And then you get it fixed up and stabilized, and you later refinance it. Maybe it's 6 months down the road, maybe it's a few years down the road, but you refinance it and get a $187,000 $500 loan, and you pay off the private lender, and you also get some of your own cash back because the value of that property is now higher. So maybe you could get it a little bit more. Maybe you could push it a little bit more, but it just depends on the situation. The point is, if you wanted to do several deals like this private loan allows you to buy a really good deal that you found. Maybe you had to move quickly on it, allows you to stabilize it, allows you to get it rented. And if you had to hold it for a while, you could rent it for $1,900, still pay your taxes, insurance, your maintenance, and still hold it for a while. And you have 5 years to either sell it, to refinance, to find a partner, to do something else. And so very often, you want to get longer than 5 years, but a lot of private lenders would probably want to stay with a smaller amount of time. I wanted to give you one more alternative example just to get you thinking about the possibilities with private money. So let's say in this case, you get a second mortgage with a private lender instead of a first. You have the same property, you find a deal that's worth $250,000 after repair value. You have $200,000 total investment, same price, $150,000, $50,000 in repairs and cost. But let's say that you can find a first mortgage from somewhere. Maybe you can get a commercial loan at a local bank or a local bank loan who's willing to loan you $125,000 on your $150,000 purchase. Or maybe you get some of the other creative strategies that I talk about on this channel or in my course, Creative Financing for Real Estate Investors, where you can buy the property subject to a $125,000 mortgage, or you get seller financing or some other source of money. The point is, if you can find that other money, you can get a 5% loan for $825 per month. So let's say that's the monthly payment that you have on that payment. You still have to come up with more money though. You only have $125,000, so you have another $75,000. So let's say you could find a private lender who could put up $50,000 and be in second position. They're willing to do that. And would they be willing to do that? Not every private lender, but if they're at a low enough loan to value, and a lot of the things I talk about in the course is how can you make sure they have some security and understand the paperwork and talk to their attorney. So there are people out there, and I've done a lot of deals early in my career, especially where I had private lenders in second position at low loan to values like this. And I pay them, let's say you pay them 7% interest in this case, interest only $292 per month. And then you go and you have the money now, you have to put up $25,000 of your own money to to top it off. But then you fix it up, you get it rented for the same $1,900 per month. And then down the road, what can you do? You now have this good rental property that you've been trying to buy. And the whole point was, how do you puzzle together the money to buy the property? That's where private money comes in. Not every deal is exactly like a cookie cutter, or you can find $150,000 in private money. You might have to puzzle together or piece together. And this commercial lender would have to be okay with a private lender being in second position. And with commercial loans, they often would be, especially if you have a good relationship with them, or a subject to or seller financing would be much more likely to let you do that. And the point is, sometimes you have to be creative to get a deal done. And in this case, you've got the rental property. Later on, you could try to refinance it, or maybe you just save the cash and pay off that private lender at some point. The idea though is, how do you use private money? You're creative with it. You find a deal that works for everybody. And this is just one example of how that might happen. I hope this video has helped you to learn what private money is, who some potential private lenders might be, and what a typical private money transaction looks like. Of course, there are a lot of details that go into applying this in real life, but if you can learn it and do it, it can make a huge difference for you as a real estate investor. I know it's been that way for me. And one of the #1 ways you can apply this and learn it is to get more education. I have a course called Creative Financing for Real Estate Investors that I teach with a mentor of mine named Dyke Spotiford, who's been investing in real estate for over 40 years using creative tools like private money. And in the course, we go into a lot of the details of the paperwork, the transactions, some of the legal hurdles you need to be aware of, and the team members you need to build in your local area, like a local attorney, to help you apply private money. So if you want to get more confident both using private money and a lot of other creative financing tools, check that course out. There's a link below in the video description. If you have any questions or comments about the video, I would love to hear from you in the comment section below. And if you like this video, I would appreciate it if you smash the like button to help me spread the word on YouTube. And if you're new to the channel, be sure to hit the subscribe button and the little bell so you don't miss anything. I have new tutorial videos just like this coming out every Friday, and I have a new podcast episode that comes out every Monday morning. And if you like this topic of private money, I think you'll like my next creative financing playlist here on YouTube, which is all about different tools you can use to buy real estate without having to go to the bank. You can find that above me somewhere here, and also as a link in the video description below. You've been watching Coach Carson TV. My name is Chad Carson. You can also call me Coach, and this is a channel all about investing in real estate, achieving financial independence, and doing more of what matters. See you next time.